So good morning, good afternoon, good evening, traders, wherever you are in the world. Victorfx here. In today's video, we're going to be looking at risk to reward or win rates in a Forex trading strategy. So we're going to cover this very briefly. Which trading style is the best? This is going to be a little biased from my own perspective. So definitely stick to your own trading strategy or trading plan. If it's not based on my bias, okay, so far I'm making money in the market, you're above the 5%, so keep up what you're doing. So we're going to be looking at which trading style is better: the high win rate, low RR. And when I say RR, I mean risk to reward. Okay, so for example, if this was a trade here, we are risking relatively $1 here, a single dollar, to make $10 up here. Okay, so this is what we mean by risk to reward: risking $1 to make potentially what, $10. Okay, so scaling up, risking $10 to make $100, so on and so on. Okay, so this is a high risk to reward, but what's low win rate. So probably if you take out of, maybe you say you take 10 trades and then you lose 6 of those trades. Okay, so 6 of those trades ended in a loss. Okay, so that is gonna be still going to be winning, because 6 times 1 is what, 6. So you risk $6 at the end of the day, and you want just 4 trades. That's gonna be 4 times 10, and that's gonna give us what, $40. And you can see the difference between $40 and $6 at the end of the day, and you believe that, okay, this is not really something too important, and it's not really something you should pay too much attention to when you're executing high risk reward. Now the other case is when you are looking at low win rates and high risk to reward. Low win rates and high risk to reward, and I believe I've got something marked out here. You can see in this case, if you're risking $1, you are making back $1.5. Okay, you're risking $1 to make $1.5. Same thing as risking $10 here to make $15. And some people even risk $1 to make $1. I mean, it's very weird, and I don't advise anyone to do that. But at the end of the day, do what you please. This is a market, Forex market. It really doesn't matter how you trade, as long as you keep making profit. But you need to put yourself on a statistical edge, which has been proven to work over time, and which is going to give you genuine profitability in this market. Now personally, I don't really try to put myself in the high win rates, low risk reward. Okay, so I am personally against this. Okay, I've done it in the past, and I really know how hard it is to maintain. But if your strategy surrounds this, and you've built an edge around this, and you've been consistently doing it, keep up the good work, and it's very good for you. Else, you should definitely look at getting high risk to reward. Now it doesn't have to be a 1 to 10. You could easily be looking at a minimum of a 1 to 3, a 1 to 4, or a 1 to 5 per trade, so you actually are making money based on the risk which you are putting out on the market. Okay, now I'm going to look at an equity curve of a high risk to reward, and then the equity curve of a low risk to reward. Let me get some shapes out. Okay, so let's get this at our canvas. Now imagine this is your graph for a high risk to reward trade. Now let's imagine you started on this straight line here. Set your account on this straight line here. Now if your account starts getting losers on a high risk to reward account trading style, you're gonna start looking at lower losers like this. Maybe you lose 2 times, 3 times, 4 times. Now immediately you get your win, you go back maybe above break even a little bit, and then you start taking more losses. Okay, let me zoom in on this so you can see it clearly. You start taking more losses. Okay, another win, your account is already up. Now see how you don't have to consciously be looking at, oh, is my account up? You just keep executing your strategy, and you know that that's definitely what it's gonna be doing. Now for some weird scenarios, you might get up, a little pullback, and up once more. Now the amount of losses you will need to take in order to bring this account back to this break even now is gonna be a lot. Okay, so because of your high risk to reward, the potential of going higher is gonna be a lot larger. That's why I see a lot of swing traders are the most successful traders as compared to day traders. I'm a day trader, okay, but we have to state the truth. So doesn't mean you cannot be successful doing day trading and so on. But swing traders hold positions for longer periods of time, and that's why most of the times they end up recouping their losses and even making a lot of profit on top of it. Okay, I know some swing traders that risk 0.2%, and they end up making 15% in a month. So it's just based on what risk to reward. Okay, sometimes they don't really have that good of a win rate, but at the end of the day, you should always stick to your plan, and your plan should always give you a manageable win rate, and then you stick on riding out those risk to reward. Okay, so this is what we continue doing that. Over time, you get a lot of losses, a swing up, a lot of losses, swing up. Some losses might linger a little bit, swing up, linger, swing up. But at the end of the day, you keep getting all-time highs as if you're in a bullish market. Maybe this is UJ. Just a joke, okay? Don't take any offense on this. So this might be UJ, and this is your what? Equity call for high risk to reward. Okay, I'm gonna show you the bad side of this risk, high risk to reward at the end of this, but for now, let's stick to equity curve of high risk to reward and low win rate. And this is gonna be the equity curve of what? High win rate and then low risk to reward. So your account is gonna start up nice. Let's get rid of that. Your account is gonna start up just going nice. Your loss is gonna draw it down a little bit because you're not aiming for high risk to reward. It's gonna go up nice. Your loss is gonna draw down against you. I'm talking of traders that stick to their trading plan. Okay, this is not for emotional traders. I mean proper traders who just know their edge, execute based on their edge, and don't get emotional in any point. So you keep going higher, you keep going higher, and you keep going higher. This is for high win rate. You have the potential of going what? Higher. Now there's an edge to this. Okay, so like a knife with an edge. There's an edge to this, and then there's something that's gonna happen, and then any of this strategy could instantly go to shit. This can go to shit, and this can go to shit. Okay, I've executed the both, so I have the privilege of speaking on any of them. Okay, now you can see the underlying facts here of what we're trying to discuss, which is the effect of high win rate on psychology of a trader. Okay, so the effect of high win rates on psychology of a trader. Now remember I said high win rates and then low the effect of what? Let me see. Effect of high win rate. Okay, we're going to talk about the high win rate first of all, which is this stuff right here, the high win rates and low risk to reward. Now you can notice a lot of traders, for them to get high win rates, they have to execute a very tight requirement for them. Okay, so maybe they are using a larger stop loss. Maybe you are using 20 pips stop loss, or you're using 30 pips stop loss to get a target of 20 pips or 10 pips at the end of the day. So you have to be very precise on the market prediction. You have less chances for error. Okay, so you have to be spot on right a lot of the times, have less chances for error, and you have to stick to it, else you would be stabbing yourself with your own knife. Okay, so you have the chance to do that. Now what it goes south or it goes wrong for me personally, what I've experienced with having a high win rate is when you start building up your equity. Okay, so you start getting your equity to start going up this way, high. Your mentality, your brain is already tuned to always making money, maybe plus 1% or plus $1, plus $10, depending on the percentage of account they are risking. You're already tuned to this profit. And if you are someone that likes withdrawing, okay, you withdraw a lot. You discover that you are used to this circle. So when you start getting maybe 2 losers in a row, or maybe 3 losers in a row due to your win rate, you start feeling that this is something abnormal, and this is something that normally is supposed to happen once in a blue moon. But in this case, the trader might end up changing the strategy, not following the original strategy that give this proper bullish and up move, and start trading wrongly, over risking, stuff like that, and either you go back to break even or you blow your account. If you're a smart trader, you withdraw all your money first of all, get your psychology back into the proper game, and then you start continuously do your proper strategy, and over time you're supposed to go higher. Now what happens if you don't get emotional about this? You're gonna get a move up, a little move down. Okay, don't be scared about it. Another proper move up with your win rate. Okay, so this is gonna happen on any given strategy. So in the high win rate, it's more psychologically affecting the trader as compared to the low win rate, high risk to reward. Okay, now in this case I say the winners are going to affect your psychology. Now in the low risk to reward, high win rate strategy, which is this strategy right here, in the high win rate, high risk reward, low win rate, what's going to affect the trader a lot is the beginning losing streaks. Okay, So you might start and you might get 5 losses in a row. Okay, and then if you don't fix your psychology to know that you're performing your edge and your edge is supposed to hold over time, you will end up doing what is not proper. Okay, so you end up trying to over risk. Maybe you are risking 1% here, you might try to over risk, and then you still get what, a dip down, which is gonna get into fatal losses. And then you should continue until you find a trade and you don't make the trade being a high win rate trade or a high risk reward trade, sorry. You just take partials a lot and it doesn't go high, you keep going down, and your account just goes into dump. Not because you're not catching good trades, you just have to know this part of trading. It's not about catching trades. Your management is actually the only thing that's going to make you profitable. Not the only thing, okay? Management strategy is going to make you a profitable trader. So if you're on a high win rate side and you see your account going lower, just be fine with it, because the next trade might take you at your all-time high. Okay, and if you're lucky and get that in a row, fine. If you're not lucky, it goes down a little bit, it's still gonna go up at the end of the day. So when you're getting losses, just know your edge is playing out, and you should at the end of the day be running all-time highs. Okay, manage your account properly, withdraw based on your own as you see fit, so on and so on. Okay, so those are the 2 psychological barriers when it comes to either high risk to reward, low win rate, or high win rate, low risk to reward. Okay, so these are the 2 things that will affect, and I personally I'm attested to this. High win rate and low win rate, high risk to reward. Okay, so at the end of the day, I'm working on my edge, so trying my best to keep my win rate at least maybe 50%. I'm okay even with the 30% win rate or 20% win rate at the end of the day. So far my edge is playing out and I'm taking my profits as desired. Now if you want to watch a video where I'll be going in depth on how to build a trading strategy and a trading plan, okay, so you know exactly how to create yours, you can just leave a like on this video, subscribe, okay, because YouTube takes note of the likes and subscribe of every person, so this channel will be able to grow and elevate. Okay, so that is what I have to say, and hopefully you learned something in this video. Leave a comment if you found it interesting, or if you have any question concerning anything.